Hey all, welcome to ShareTrek. This is Raj here. Friends, I have Sandeep with me, and today we are going to just have a general discussion on what we plan to do next. Basically, we want to talk about financial analysis, but it's a very dry topic, and we want to set the stage for it so that when we do the video, probably the week after next, you would know what exactly to expect. And I'm also going to talk in this video with Sandeep about some of the common problems we as retail investors face when we start investing, and the general mistakes that we do, and also the rationale of how to use ShareTrek channel when you're investing, and what is our objectives and how we are approaching it, and how Sandeep is approaching it. So we're just going to share those things. It'll be interesting because you might find a reflection of your own thoughts in what we have experienced, because as retail investors, all of us go through the same life cycle and become better investors. So regardless of whichever stage you are at, either you'll find benefit from this or you'll be able to put something in the comment that can help all of us. With that said, let's get started. Welcome back, friends. Hey, Sandeep. So today, actually, I wanted to use this video as a free format to discuss with our members as well as subscribers and viewers about our life as retail investors, share some of my experiences and some of the common problems that I had faced and I had learned, and why I started ShareTrek channel and how best people can use this. I thought that we'll do this segment also because of two reasons. One is you do financial analysis very well, Sandeep, and you have done those videos on Mondays. It's well received. So I was thinking that if you're going to do a financial analysis video, it will have all those ratios. And when you talk about a bunch of ratios, it's like sitting in the classroom. And many of us, after a point of time, after having graduated, I'm talking about myself, you're still a young man, but many people who are at their 35 or 36, something like that, they have been away from the classroom for a long time. And the moment you put them in a lecture, after 3 minutes, they're going to be zonked out. They'll be sleeping on the chair out there, or they will lose their attention and skip and go to watch a cat video or something like that. So, so I thought that let us have a free format discussion about that. That was point number one. The second thing I wanted to address was one of our viewers was asking me consistently about a particular company. Should I buy the company? What is the best price? And this is my average. He also gave me a list of companies that are in his portfolio, and he wanted me to say, to rate his portfolio. Okay. So all those things I could not do in the comments. So today in this video, I'm going to address those kind of situations as well, because I respect all of our subscribers and viewers, even if they have not subscribed, because you've taken the time to look at our work. So I really appreciate that. But at the same time, if I don't answer you, that is rude. So I do answer, but the answer is always incomplete, because these kind of questions, it's like pulling a tree with a root. There is a lot of things to unpack. So this video will give me an opportunity to do that. So I'll start off with the first one, Sandeep, before I come to the ratio analysis. So this viewer had asked us about a particular share, and he said he gave me his average purchase price, and he asked me if he could buy more because the share was continuing to fall. And I was not able to answer that question in the comment section. And then immediately he had another question. So I said, you know what, I'll address in a video. Then he started following up with me, when is the video coming? So I told him, please hold on, because I need some time to formulate my thoughts. And then he gave me his entire portfolio, including in India, and he requested me to rate it. Now, I'm not saying his expectation is unreasonable. Of course, he likes our channel, he likes our opinion, and that's why he asked us. But as a content creator, especially in the finance sector, I want to be very, very careful about how our channel gives information so that people do not get burnt and people do not lose money. Because we are not financial advisors. Our video is more in the entertainment category than financial advice. What we are doing is we are sharing our thoughts and opinions, not financial advice. And one of the reasons why we are not giving you financial advices because first, we are not certified to be a financial advisor for you. Of course, Sandeep has got certification, but again, when a YouTube video goes out in the world, it's going to various jurisdictions. You may be certified in one country, but not in another. So you don't have the ability to give financial advice to anybody. The SEC will come down on you. The Canadian Investment Board will come down on you. SEBI of India will come down on you. That's what will happen. So that's point number one. Point number two, which is more important and more practical, is that the share market is very, very dynamic, right, Sandeep? You have you invested money in the share market on a particular share and seen it drop down like a stone?
Oh, yes. My
So
goodness.
you always
More
feel
times than one, more times than 10.
and and many times you end up thinking, it's like you're in the traffic, and when you move to the next lane, which was moving faster, you find that as soon as you move into the next lane, that lane is going slower. And whenever you approach a signal, you think that the signal goes red. So
Yes,
these are the
yes.
feelings that we get when it comes to the stock market, because as soon as you buy a stock, it stops moving up and then it starts going down. And when you
Yes.
sell, immediately it starts going up.
Yes. Like Schrodinger's stock. The stock you hold always goes down. The stock you were going to buy always goes up. And the stock you didn't actually consider buying, or the stock you were going to buy, is always a stock that does the opposite of what you wanted to do. Schrodinger's stock.
Exactly.
Yeah.
And the psychology of that is that we always remember pivotal events and we forget the rest of the occurrences, because there may be other stocks also which didn't do what you described, but that doesn't register in our mind. We remember sensational situations. We remember absolutely sensational situations. Either you bought a stock and it dropped like a stone, you will remember that. But if you bought a stock and it was meandering around and for a long time, you will remember that. But if you made a profit and you sold it immediately, and if the profit was small amounts, you will forget it. But if the profit was huge, you will remember it. If the loss was small, you'll forget it. If the loss was huge, you remember it. So at the end of it, you have this weird memory of things not at all mapping to your expectations.
Yes.
And you think that you're totally out of sync with the market. And I think that it happens to everybody. It happens even to the best, because it's very difficult to predict the market. The market is like an ocean. Like the ocean is full of drops of water, which is all got together, and some force, a collective force is pushing them, right? So,
yes, exactly.
So Sandeep, let us say you have looked at some shares and you look at financial ratios, right? So you have some ratios which are going to say how strong the company is from a financial perspective. Then you have ratios which say how good it is at its work, its efficiency, how profitable it is as a percentage. And then you compare with other companies in the peer group. And then you can draw a conclusion. This is what I think you might explain in the next video.
Yes.
And you may draw some conclusion where you say, okay, this company is good and it has got to do better than the other companies. It is undervalued or overvalued compared to its peers, right? That's how you do financial analysis.
Yes. Right? Well, good, great explanation.
Yeah. Now, many people also say that financial analysis alone is not enough. You have to do technical analysis. And many people say technical analysis alone is not enough. You have to do financial analysis.
Yes.
Okay. So let us say you did a company, you liked everything you saw, and I'm looking at technical analysis and I'm saying it's not adding up. That's quite possible, right? And it may add up, and still, when your financial analysis is done good, technical analysis is good, and then you invest and still the stock drops down, right? Then you should not lose faith in your technical analysis or financial analysis, because those are established patterns and occurrences that have been recorded from the past and proven successful. And then what is happening is that our market, just like our viewers in various channels, right? Our market is also heterogeneous. For example, I'll give you a contrast. If you are in a school or a college, if let us say you are in grade 10, so all the students in grade 10 have passed grade 9 and have the same level of knowledge. Some may be a little better, some may be a little weaker, but they have all had some basic knowledge, which is a foundation on which you're delivering new knowledge. and they all pick it up equally. However, when you look at the stock market and the participants, you have people who are literally gambling in the stock market. They don't know anything about the stock they are buying. It's like you go to the horse races for the first time, and you think a horse has got a good look and it has got a good color on top of it, and the number is your lucky number, and you just plonk money on it. You may or may not win. That is gambling.
Yeah.
And that's exactly what some people do when they come to the stock market. So you have those kind of people. Then you have people who suddenly have a lot of money in their hand. Maybe they sold a house, or they won a lottery, or they just retired and they got some money, something like that. Okay. And they are saying, I want to invest this right away. And then they see a share going up, and then they put the money into it. Right. So the entire life's retirement money. We had a viewer in our channel who said he put his entire retirement money, I think, on Ginkgo Bioworks, if I'm not mistaken, or some other company.
Wow.
And he was worried about how low it had fallen. I think his investment price was in the $7 or something.
Oh my
Now
goodness.
it is in the a dollar and range, right? So those kind of people are also there. And then you have these hedge funds who are doing all kind of funky things, right? My understanding is that the trading system that you and I use as retail investors, it is not as fast as the trading systems that the hedge fund guys are using, and also the big institutions are using. And there is something called as a dark pool, which is which is operating in the background, right?
Yes.
And then you have players like what is that called? There is a stock market company which allows you to invest in 1 share, 2 share. It is free to buy and things like that. Robinhood.
Yes.
I think it was Robinhood, right?
Yes, Robinhood lets you have fractional shares.
Fractional shares and all. Yeah. So now what those people do is that they can see what price someone wants to buy. They can see what price people want to sell. They know the whole deal and they know how to match it. So they aggregate it, and then they will tell you what price they sold yours for or what price they bought it for you. So there is a slice out there which they take out. We never have visibility to it. Even when we place our trades, we don't have visibility to it.
Yes.
Okay. So sometimes it may happen that you see that you have put an order to buy a share for $3.25. It goes to $3.25, stays there for 5 minutes, and yet your order is not executed. And then it goes up again, and you end the day without having been able to buy the stock. It has happened to me many times.
Yeah.
Right. So that's the problem. And you have other investors who are actually financially literate, like Sandeep, like yourself. You have done CFP, right?
I've done the CSC. I'm working on CFP.
Canadian Securities Courses.
Yes,
So you have
I'm
done
working
that
on
course.
CFP.
Yeah. And also you have done your financial management course, and you are using fundamental analysis when you're investing. So there are people like yourself also who are in the market. And then we have people who are international investors who are investing in New York Stock Exchange. The people from all over the world are investing, right? And among all these investors, you have got sections of investors who are investing not only in stocks, but they are investing in bonds, they're investing in metals, they are investing in commodities, and they are investing it in various exotic items that you and I don't have access to. Those kind of people, yeah, they're including real estate and all that. So those kind of people, for them, when they look at the share market, they are not looking at the stocks with the same paradigm as we are looking. A stock may seem very attractive to us, but they are still not biting on it because they have got even more attractive deal in some other area of the world, in some other sector. One of the examples I gave recently in one of my videos was US Treasury bills, bonds, right? Right now, you get bond in a cheap price, high interest rates. And if you hold on to it, and as the interest rates drop, you're going to continue to get the same high interest rate if you hold the bond. Plus, you'll have capital gains, and then you'll have to make a choice when you want to realize the capital gain, because as soon as you realize the capital gain, you're going to lose the high interest rate that you're getting. But the choice is yours.
Yes.
So they may do that. For example, take the real estate market in Canada.
Right.
With high interest rates, you can get detached bungalows in a place like Young and Shepherd, which is a very, very in demand area, for a much lower price than before. And rents are sky high at this point of time. So if someone had a lot of money, they are investing in shares, they are investing in gold, they're investing in oil, and they are investing in real estate and government treasuries. They could even look at buying a bunch of properties at Young and Shepherd and giving it out on rent and waiting it out. And when the interest rates go down, they can just raise all those bungalows and build a condominium on it, right? And make a lot of money. So why I'm telling all this story is that the very simplistic question is, Raj, CRISPR is now quoting at around $35. How much lower can it go? Should I buy it now? And will it go up? I can't guarantee that, because because every participant in the market has to be on the same wavelength for the shares to move in the direction that we think it should.
Yes.
Or else we will alone be looking at. This reminds me of Indiana Jones. There was this Indiana Jones movie. I don't know which of the movies it was, but Harrison Ford is that professor who goes and finds artifacts and all that. So he's in one of these exotic place, and then these goons come to attack him, right? So one of them has got this nunchuck thing or something, and he does this, and all that, and he's ready to attack, and Harrison Ford just pulls out a gun and shoots him dead. Right?
Yes,
so
yes.
It's like that. We are doing the nunchuck thing by looking at fundamental analysis, at technical analysis, going to various YouTube channels, message boards, looking at all that stuff. Maybe our ShareTrek community will jointly believe that Ginkgo Bioworks should go up tomorrow. But the rest of the world is in a different wavelength altogether. Some people are not even paying attention to Ginkgo Bioworks. Maybe the momentum is very, very low. There is no interest. People not concerned. They don't even care about it. Who knows what's happening out there, right? So it's very difficult to predict.
A short while ago, we had weird factors where Donald Trump would tweet something weird, or Elon Musk would tweet something weird, and that would just cause a big mess up in the stock.
Yeah. And also, you mentioned Elon Musk, right? There are a lot of these spurious videos about Elon Musk saying something will go up, something will go down. And there are web articles and all that with Elon Musk's photo on it, right? So that's absolutely crazy. I mean, there are pump and dump schemes also that are happening out there big time, right? So so all those things are happening. So friends, that's the reason why I refrain from saying buy this stock or buy that stock, because when I'm telling you buy a particular stock, which I will never do, but if I did, I would be doing it because I think fundamentals are looking good, technicals are looking good, momentum is good, MACD is looking positive, and the averages are all moving upwards and arranging themselves to go into a bullish position. So this is the extent of my awareness of the market. And I'm looking at the government and all, everything is stable, right? And I'll say, okay, we can buy now. But then the very next minute, or maybe an hour down the line, or by the end of the day, some news article comes and I change my mind. And you don't know about it because I've told you can buy. You went ahead, you bought it, and then you're gone to do something else. Your wife gave you a shopping list, you did that. Next morning, you went to the office and you forgot about this whole thing. 2 months down the line, you come and look at your portfolio and it is all negative. And you say, Raj told me to buy this, it's negative, right? I don't want that happening to you, because then you'll ask me what you did. I'll say, I didn't buy it because I changed my mind, and you'll feel cheated. Right? So I can't be very dynamic with you. If I tell you buy this, then I'll have to be keeping on sending you a text message saying I've changed my mind, I'm doing this, I'm doing that. I don't have the bandwidth, so I wouldn't do that. And I don't have the certification to do that either. Right? So that's why you will never get that kind of an answer from the channel. But what we will do is I will share my view as a retail investor, what I am doing. I can give you a glimpse into my portfolio from time to time, the shares that I hold. And I can tell you, this is what I'm expecting. And I'll honestly tell you how many of my shares are in the red and how many are in the green if I made some profit. And it's very difficult for anybody to consistently be making profit. Now look at Kathy Woods, a prime example.
Great example.
She has got a lot of confidence. If she was running a mutual fund, I mean, she would be out of a job by now, because people would have redeemed the mutual fund and it should have been all gone and she would be looking for a job. But because she's managing an exchange traded fund, all the money that is there is never going to leave the fund. What will happen is people who don't have the appetite, who don't have the guts, to go on the ride with her will drop off at various points of time, and others who think it's a right price will buy the ETF, and the ETF will be ongoing. But people will book loss, book profit, book loss, book profit, and move in and out like a train. They are getting into it and getting out at another station and so on. And Kathy Woods is continuing to do her work of accumulating values. And one day the ship will come home and there'll be a lot of goodies. And some people, lucky people who are still holding the ETF, are going to make money big time. But when will that happen? Even Kathy Woods can't say, because the rest of the market has to be in the same sync with her in order to give those shares the value that she thinks they deserve.
Yes, well said, well said.
So Sandeep, so that's one of the main things I wanted to say. And Sandeep, I wanted to ask you about the challenges of presenting something like ratio analysis and fundamental analysis, which I'm requesting you to do for our ShareTrek viewers. Can you share your thoughts? Do you think it will be very challenging, and how do we do that?
So, by the way, thank you for asking that question. That's a great question. It is very challenging. It's fun. What people don't hear is it takes almost 5 hours of work to do like a 20-30 minute video, but that's fun. The thing that's kind of a challenge is the mental part afterwards, where you're thinking, I thought that, let's just say, SoFi wasn't that great of an investment, but what if something changes and some folks go to, as you were saying, this one video, this one day, analyzing this one earnings for this one quarter? What if it turns around tomorrow? And what if this company, Biden, says that, hey, student debt relief, we're paying off all of it, and SoFi just goes, wow, we got a whole bunch of money coming in? That's something which in that moment I didn't consider. So I am worried that the analysis, although it doesn't stand the test of time, some viewers might think that it does stand the test of time. And that is something that a lot of viewers need to understand, that this is very, very time sensitive. And these ratios, they are very important, but they need to be compared to something else. Opportunity cost, the opportunity of investing in Airbnb or SoFi today, or not invest in this and instead putting money in NVIDIA or AMD or something else, which he or she, this investor, might think, hey, it's great.
Yeah. So when we talk about this, I have another example. Yeah. I'm a real estate broker in Toronto, so I look at real estate. I'm also a real estate investor. So we constantly come across this concept of appraisal. We get properties appraised. I know how appraisal works because we were taught, but we are not authorized to appraise as real estate brokers in Toronto. Oh. But we get specialized appraisers who are certified for this. And when an appraiser gives us an appraisal, it's understood to be for that property at that point of time.
Yes, yes.
It's a spot analysis. It's a snapshot.
Yes.
That as of 20th or let us say 22nd of October 2022, this is the value of the property. And at that time, the bank makes a decision to give mortgage based on that valuation. Mm-hmm. And after that, you cannot hold the appraiser liable for anything else. It's on the spot at that point of time. And once that point of time is gone, the liability of the appraiser is gone, actually, because factors change. There are too many factors that can change to change the value of the property.
Right.
That is understood. The same way, whatever you did, that's why I have the disclaimer in our channel. One is always running at the bottom, saying that this is personal advice, not financial advice. Do your own due diligence. The other is that comes after the music of the channel, the titles. I have a disclaimer which clearly says, I'm not a doctor, and whatever I'm talking about in terms of medicines or genes, those things are to be taken as entertainment. Verify it. I'm not a financial analyst, so whatever I'm saying is my personal opinion. Do your own due diligence before investing, something to that effect. So I put it there for investors to understand. when they look at this channel. And this is true for not only ShareTrack, but for all the channels. Even if you do a Patreon and you pay and join any channel where they are going to give you actual tips on what to buy and sell, the underlying is going to be the facts that I mentioned. Not all parties in the market are always in the same wavelength. Different people
Right.
are at
Well
different
said.
levels of awareness of different factors, and the aggregate is reflected in the share price and the movement of the indices. And the share price and the movement of the indices are also correlated with other asset classes like treasuries, gold, oil, natural gas, commodities, a whole lot of things. And interest rate regime, monetary policy, potential instability in the government or war in some part of the world. So it's all very, very interconnected, and the awareness of various people is different at different times. At some point of time, something major happens, which becomes the apex incident for a particular sector where everybody's thoughts are aligned. And that's when the prices either go up together or go down together, because those are the point of times when there is a synchronization of thoughts. And after that, people disperse again, looking at that their areas and their indicators and their sources of news. So yeah.
And there are factors which are completely out of our control, which have significant weight, such as macro factors, such
Yeah.
as money supply and interest rates, where if central banks were to increase the money supply as they did globally during the pandemic, we would see companies which fundamentally have no right being the valuation that they do being insanely valued. But that makes sense because there is so much money out there that people, investors are thinking, hey, we'll put our money into this, into that.
And there are only so many
Yes,
stocks.
exactly. A while ago, and this was in the news a few years back, the company Theranos. I did an analysis on Theranos and I looked at the timing of when that company came out, and I looked at the M2 and the M3 money supply, and I kind of thought that, wait a minute, so many people were just investing in this company which didn't have very much studies and analysis, but I kind of drew the conclusion that a lot of that is because the money supply was just so high that people were just, investors were just throwing money at things which had no right to do so. But the opposite could happen too, where if the money supply is so tight, people would be so stingy with money that things could trade at a very low book value for so long and just go ignored.
Yeah. I think that's a good example, Theranos. Another example, when you said Theranos, in my mind goes to Grail, because Grail is also doing a blood test which will find cancers. So I'm not saying Grail is dubious or anything. I have no opinions on whether Grail is a good company or bad company. But for preparing the video on Illumina, which I released a few days ago, I had to do a little bit of study on the original agreement for acquisition of Grail. So basically, that agreement was providing for $300 million, even if the acquisition was dropped because of statutory reasons like competition authority and all. And on top of that, if it was dropped because of those reasons and that $300 million was triggered, Grail will have the opportunity to ask for another $300 million. So that's a total of $6 million on the hook. And according to Carl Icahn, he claims that before the Grail deal, the directors bought extra insurance. They bought extra insurance to insure themselves as a board against liabilities related to the Grail acquisition.
Oh my goodness.
Right? Now, none of us shareholders know what is happening. At that point of time, if I was to rewind back earlier, okay, I'm going to share the screen with you. Can you see the screen?
I can, yes.
Yeah. So if we look at Illumina out here, right, I'm just going to rewind this. And Grail deal, I think it happened in 2021, if I'm not mistaken.
I believe you're correct.
Yeah. So
Yes.
just imagine
That's
people are looking at Illumina share price somewhere in the range of 474, right? And they talk about acquiring Grail and whatnot, and the share price is going up, right? This is all hype. Many people are thinking, okay, our CEO is doing a good job, our management is taking care of our interests and everything, and now we are going to have a even stronger company or whatever. And once all those things come out, you see how they have dropped,
Yes. Oh my goodness.
right? They
This
have dropped all the way down to 119. And how much more they will drop, we don't know, because we have an earnings call coming up. And now they will have to pay that fine of $474 million. And they also have to book losses, if any, for disposing of Grail,
yes.
right?
Multi-year
And if
low.
they don't book a loss and instead they decide to give shares to existing shareholders, if they give shares of Grail to existing shareholders, make that a separate company, then the shareholders are going to inherit that, and they have to provide 2.5 years worth of expenses. Now, coming back to what I was trying to say with this example, is that at any point of time, we really don't know what's happening in a company. Inside the company, the CEO and the board of directors, they were all working on these things. They knew what kind of a agreement they were getting into with Grail, and they thought it was workable, and we have put our faith in them. And if someone had invested in Illumina at that time, anywhere between $450 to $515 or something, right now they are not a very happy person. As a result, the CEO had to resign. The board chairman lost his job. Carl Icahn came in, and the saga is still not ended. The new CEO has the opportunity to just divest Grail, do a clean slate, and if he does that, probably will go up again. But this could happen to any company.
Yes.
This could happen to any company.
Yes. And some companies, some funds choose not to invest in some companies because of things like this risk of having to pay off Grail, having to pay so and so investors. Because of that, certain funds will say, hey, the risk profile of my clients do not align with this company. So I'm going to sell this company and wait until it settles all of this drama, all this nonsense to some people's mindset. And when it deals with all of that, then I'll consider it. And that was a situation with I believe what was happening with Tesla a while ago
Yes.
with Elon Musk and Twitter. Many funds started selling Tesla because they thought, hey, this does not align with the risk profile of my clients. So at this point, we are not interested in Tesla, but we might be interested in a gain because it might become less risky and this Twitter debacle might get settled.
Yeah, yeah. I think talking about Tesla is also, again, very interesting, because I see parallels for Tesla along with politics. Okay.
Yes.
In the
Yes.
US, many voters thought that Trump is a billionaire and he has run the apprentice. So he's going to fix the company, government, and he'll do this and that. Same thing with Elon Musk. Even now, I see a lot of people misusing the name of Elon Musk to hawk various products and concepts, like Elon reads these books, you should read it too, things like that, where I'm pretty sure that Elon Musk doesn't even know that somebody is using his image and likeness to promote some things. He may not
Yes.
even have read those books, but somebody saying, Elon reads these 6 books, he thinks that you should read these 6 books, things like that. So the Tesla, I have Tesla shares and they are negative, almost 26% negative. Okay. I never dreamt
Rough.
that my Tesla shares would be so beaten down.
Mhm.
And I bought it because I thought electrical vehicles are the future. I still think EVs are the future, and probably hydrogen vehicles might come in and they will also form a part of the complement, but we are moving away from fossil fuels. So with that in mind, I had bought Tesla. But that was all before he bought Twitter and before he made it X and all those things.
Yes.
And uh, I think what Tesla is also suffering from is not only the problem with the overall economy, but I think Elon Musk has pissed off his core demographic. There were many people who were fans of Elon Musk because he was doing electric vehicles which are environment friendly.
Yeah.
and these are typically liberals. And I think that with whatever he had done in X, and also he has dared to behave like a president at least 2 or 3 times in the recent past. Once when he remarked about Taiwan
Yes.
and caused the international scene, and another time when he announced Starlink for Ukraine
Yes.
and then discontinued the service at a critical time. So these are all not the things that the CEO of a listed company should
Mm,
be doing.
right.
And also, whatever statement he does on X, that kind of forms the opinion for many people about what kind of a person Elon Musk is. And that has a bearing on the brand value of Tesla.
Right.
And I think all of that is coming to hurt him. I don't want to sell my Tesla shares because I don't want to book a loss at this point of time. It's
Mhm.
down
Fair enough.
26% in my books. So I'm going to wait it out. But if you recollect, Apple, at one point of time, they had kicked out Steve Jobs, and then they had to bring him back again, and he reconstructed the company. So it's not unconceivable that the founders of companies,
Mhm.
can get kicked off from the company, and probably they'll get a chance to come back again once they are cooled off and reoriented themselves.
Yes.
So however a genius you are, and another thing is that we had I remember when I was in the 12th grade, I was going for mathematics classes. Our teacher, he was in his own studies, he was not very good as a student, but he was an excellent maths teacher. And he would teach the students so nicely. Students understood all the concepts very well. So, what I'm trying to get at is that Elon Musk might be really good at coming up with EV, coming
Right.
up with SpaceX, but he may not be a good material as a president or
Mm,
as a leader,
right.
right?
Well
So
said.
there are geniuses who are genius in some areas, but not in. You can't say that one person is the apex personality. He's good at everything.
Right.
Not possible. You may be excellent at something. You may be really horrible at something else,
Yes.
right?
Exactly.
So as investors, I think we got to be pragmatic and not expect a miracle man who will just single-handedly take the company to the top. Like I keep on admiring Samarth Kulkarni of CRISPR Therapeutics. I'm admiring him because it's a no drama, and he's doing a good job. The good job for a CEO is reflected all in the numbers that you see in the balance sheet,
Right.
constantly improving, constantly higher profile for the company. That's a good CEO, right? And that's why I admire Samarth Kulkarni. But I don't think that I would expect him to appear on CNN and appear on Bill Maher and appear on various programs and start talking about CRISPR, and like I don't expect that from him, and that would not, I think, make him a good CEO. The good CEO is in the performance, in the balance sheet numbers, how
Right.
good your employees are and all, right? So we have to probably remember that.
Yes. Yes. Like somebody, I forgot who it was, but I think it might have been Simon Sinek said that Steve Jobs, he ran Apple very well. And some people were very critical of Tim Cook, but those people who knew Tim Cook knew that he might not be the out there personality that Steve Jobs was, but he knew how to get the trains to run on time. And that's what Apple needed at that time. So he was an incredible positive for the company.
Yeah, he took the mantle and he has run it very well. But
Yeah.
of late, Apple is in a bear channel. So I'm watching it carefully. I'm still up 16% on Apple,
Good for you.
but I don't know whether I want to sell it or not. But FNGO, which is 3x times leveraged, it's
Yes.
also showing a steep fall. So I've
Yeah.
pegged a price for it, and let us see in the next couple of days. I already sold 500 of my Google out of 700 and booked profits. So I have another 200 with profits, but I'm thinking that I might book the profit maybe next week. We'll see how it goes.
Nice.
Yeah.
Nice.
So Sandeep, have you ever invested in a dividend share and then the dividend share has gone bonkers, or do you have any interesting story from your investment uh, horizon? Yeah.
Oh, yes. Pardon me, I got a cough. So, yes, and there are so many great dividend companies which I would invest in for the dividend and not so much for the fundamentals. When I was earlier on in my investing career, I started off mainly just dividends because I just wanted that cash flow and I was love that cash flow. And I learned more about the DRIP dividend reinvestment plan. I thought, wait a minute, my dividends give me more shares, which give me more dividends, and I could just sit on this forever. Now I'm much so more a growth investor, but I saw that and I'm like, wow, this is really, really cool. But then I would hear stories from friends of saying, hey, my dividend company, it completely stopped paying the dividend and it's losing money and so on and so on. That was really eye-opening because I realized, hey, companies can cut their dividend, companies can lose their dividend. And there was one company I believe it was Dream Industrial, which is a Canadian real estate investment trust. I ignored it for a while. And during coronavirus, it had gone up, I think it was over 200%. And this
Wow.
is a dividend stock, which I
Yeah.
was just getting the dividend for. It did so well because during coronavirus, everyone was looking at industrials.
Right.
People wanted industrials. They wanted, excuse me, the little manufacturing plants. With the supply chain the way it was and the money supply the way it was, more money went into companies like this. And that was very positive. But if I were to look at the same thing today with interest rates the way they were affecting real estate the way it was, I would be negative. I am negative on that same company that was up 200%. And this is dividends, which are supposed to be these rarely ever move.
Yeah.
This is just very interesting that, hey, this company with dividends, it's got fundamentals too, and it follows macro.
Yeah. Sometimes we get fixed on the dividend and we don't see the capital loss and gain until it's too late. Yeah. So one of the lessons I learned of late is that when there is a profit, take it. Well, no other time. So in that process, there are some times like FNGU, I sold
Yes.
100 at 152 and it went on to great heights. At that time, I had made $8,000 profit on that.
Good for you,
Right?
man.
Yeah. And I kept the money. I waited patiently. Now it is coming down back again. It has gone below 159 or whatever I sold it at.
Wow.
And it's at around 140 something. So I placed 3 orders. First order for 50 at around 145 or something. The second order at 139 and the third order much lesser than that. So it's all standing order with the expiry date at the end of the week on Friday.
Nice.
And if I get those, I know for sure it's going to go up. FNG will go up again as the market turns around. And
Yeah,
it's
money
got all
supply.
Apple, Google, Microsoft. Those are all hardcore companies which are not going to fail.
Yes.
Yeah.
I
So,
remember something that it was Mr. Wonderful, Kevin O'Leary said,
yeah.
and I didn't put, by the way, not financial advice. He's a financial advisor, but I'm sure he would say this is not personalized or anything. But he likes to say that when you invest in something and it goes up 100%, as in it doubles, you take out your original investment and
Yes.
just play with house money. Not
Yes.
play, but keep
Yeah.
the house money. That's what he does. And that's something that I thought and I consider.
Good, good. No, that's a very good way to approach. And yeah, so those are some of the things I want to, and I'm thinking about our next video on ratios. So,
Yeah.
Sandeep, I'm thinking that if we sit in a classroom at this time, I mean, I would go to sleep within 2 minutes of a lecture starting. So we have to make it a bit entertaining.
Yes,
So
yes.
how we can do that? So that's something we'll work on in the next week.
Yes.
And do you think we'll be able to do invite for our friend Jesse?
Yes, I
Okay.
think we will, and I will put in the effort of doing that. We can't, because it's a money losing company, we can't evaluate the same way we would evaluate something like an Airbnb or
Or
a
Microsoft or
Microsoft or Thermo Fisher,
yeah.
which is one of its competitors. but we can evaluate it in another way where we could still see if there is growth and go through the earnings and see where its revenue is coming from and see if it's getting more partners. CRISPR, with all of its wonderful, wonderful technology and hope, it is it one thing to consider is how many partners it has. It's got one very, very well capitalized, well managed partner, Vertex, but how many does Invitae have? And how many places is Invitae? How many locations does it have? Is it in your average diagnostic firm? And that's something which really play a part, in my opinion, in the fundamentals. And that's something we'll look at.
Right. Let's check that out, because one of the attractions for me also with shares like Invite is that the share price is very low. So you don't have to lose sleep over it. You can buy 1,000 shares and still not worry about it. And when the gains come in, it could be superior gains in a percentage term. It'll be a bit of fun, and you can tell stories about it in cocktail circuit. Wherever you go, you can talk about it. A happy memory. So yeah, no, there's a big risk, I think, in the market. I don't know how it's going to affect people. See, for example, right now the US doesn't have House of Representatives speaker.
Yeah.
And that's a big mess. It doesn't seem to be healing. And then we have the war in Ukraine, and we have the war in the Middle East.
Yeah.
And China could make a move on Taiwan if it finds that US is overstretched. So there was, I believe, around Yemen, there was firing on US ships for around 9 hours, and they were battling some missiles. So if US gets dragged into the war in the Middle East, and they're also supporting Ukraine, then it's going to be stretched a bit thin. And if Taiwan comes in, then what would happen is all our semiconductor sector, they are definitely going to be impacted. NVIDIA, Intel, AMD, all those, because they suddenly you'll have chip shortage. Remember when that happened, our car prices and all went up. So that could boost Tesla profit margins, because they would have inventory. They are giving price cuts basically to clear inventory. Right. So if this kind of a thing, even the word of something happening in Taiwan can put a bit of a scare on availability of chips. So there are all those risks out there. I don't see any of that in the market as such. The market is going down. It's doing its own thing. But sectorally, if we were to sensitively look at what if these things happen, then there are some sectors that will shine and there are others that will go down. And with the US interest rate already so high, if there was a war, and if grain shortage, food shortage, and all supply chain bottlenecks come back again and prices go up, what is the remedy for that? Is the government going to give SOPs to people to be able to buy? It looks very messy, I mean, from my retail investor perspective. But I don't see the market behaving that much, in sync with it. Let us just have a quick look. 1 second. Let me share the screen with you.
Yes, please.
And let us look at QQQ and see what the QQQ is doing. Let me go in here. Let's go to index. Let's go to QQQ. Okay, so QQQ is still in the upper leg and it's starting to come down. So if my fears are right, I think we'll have to start falling down and come back to where we were, somewhere around 260. This was on 6th of January 2023. So we should be somewhere out here in the next 15 to 20 days, or maybe next 2 months or so, at some period of time, unless we have a House Speaker elected, and then the aid starts to go to Ukraine and Israel. And as a result, US is not overextended. As a result, there is no Taiwan issue. And therefore, there is no supply chain, no shortage, no war. So then I think we can start going up. But until that becomes clear, I think we'll keep on coming down. What is your thoughts?
My thoughts are that there is a lot of fear and uncertainty in the market. And the average person is really experiencing that fear. The average person who watches the news, where the reality might be different, it might be completely the other way around, but the average person is thinking, hey, with all this, I'm not putting my money in the market, considering all these factors, considering the factor of war, oil, inflation, commodity prices, and commodity prices, they affect the input prices of everything.
Yes.
That's something which is another consideration.
Maybe
And
money will go
yes,
into, maybe money will go into oil and gas investment. Who knows?
yes.
Yeah.
And so the average person, when he or she is scared, might not be putting money in the stock market. So until we start ticking off some of those fears one by one, getting a house speaker, oil becoming much better controlled, the issue of war being much more, having more clarity on that. Until some of those, I don't think we're gonna have much more clarity in the market, and the QQQ might either go sideways or downward. I don't know for sure, but it might not see that upward big
Yeah. Yeah. I
up
think
to the
so too.
left for a
Yeah.
while. But we do have a few dates that we can consider where November 1st, we have our CPI inflation report for
Yeah.
the US.
Yeah.
And I think it's mid to late, I think around the 20th of November, we have the Federal Reserve meeting, which that is, as some of these dates come and we get more clarity, maybe after that we might see some
Right.
uptick, some movement in the market one way or the other when we see much more clarity. So
That's right.
I'm waiting for clarity.
Yeah. I think most are. And I want to show you this chart. This is going to be our genomics, this watch list. So if you look at this watch list, Sandeep, you'll see that there is a lot of our companies which have gone into loss.
Yes.
The top loser was Invite, the one that we're going to talk about in our next week, right? And its earning is also coming up. Earnings are coming up on 8th of November. And they're expected to make a loss of 31 cents per share
Yes.
and a revenue of 120.766 million. They're not looking very good on the charts right now. They have a resistance here. Just let me mark this. That's out of compulsion. So now if we look at this entire chart out here, you will see all of these are risk shares and they have dropped significantly. And the
Yes.
only ones that made some movement are DNA, a very minor positive movement, Allogene, Bluebird, and Checkpoint. So Bluebird had a 2.8% improvement. So that's pretty good. That could be the lower sell effect, people looking forward to lower sell, and the fact that Bluebird is so cheap. But if you look at CRISPR Therapeutics, which is out here, it has
Yes.
lost 2.92%. It's
Oh,
now at 38.62. It's
yes.
looking so inexpensive right now, considering that it has got 1. I think it has got 1.8 billion on its of cash in its balance sheet, if I'm not
It
mistaken.
does.
And it's got enough money, it's got enough collaborations, and it's got two therapies.
One very
One
rich
therapy,
partner.
Exacel, already close to monetization. Then you have the CTX 110, CTX 120, CTX 130. They are all wholly owned therapies which will succeed. And VCTX is going on for diabetes, type 1 diabetes. So we have got VCTX 210, 211, 212, 213, all in clinical trials. So this company is looking very promising, but at this point of time, it seems like people don't have the confidence to put the money here. So it's
Yes.
falling. It has not yet gone to 52-week low. There's still plenty it can fall before it goes up. And we have the earnings call coming in on the 1st of November. So I'm thinking that in the earnings call, they usually give you details about each of their therapies, the progress.
Yes.
So if there is something in there for Exacel, CTX 120, 130, VCTX, then that's going to be a catalyst, and probably that will be a catalyst that will take us up to join the PDUFA date in December with the approval for Exacel.
Yes.
And in the meantime, Bluebird will also be doing the same thing. So somewhere around middle of November, I'm thinking that Bluebird and CRISPR will start moving up, and that would have a halo effect on the rest of the genomic companies in the watch list.
I'd love to see that. But one thing about CRISPR, which is a consideration, is some funds can't buy CRISPR because it's not a US company.
Yes.
And it's a, I believe, Swiss company.
Swiss company.
Yes. Because of that, some funds can't buy it at all, but they can buy things in the other sector like Intelia.
Yeah. Intelia, Verve, something like that, they can buy US-based companies. And again, I think for Bluebird also, there'll be a problem that fund companies cannot buy stocks which are below a particular cost per share.
Yes.
So I think that's something we may have for Bluebird. I don't know for sure, but those factors will be there. So which means if Bluebird goes above $5 or something, then suddenly the price will go up because various fund companies might pick up shares out there. So that's a possibility. Nice. So Sandeep, it was an interesting conversation. Any last thoughts you want to share before we close the video?
Yes, yes. By the way, this was a very fun video. I really, really enjoyed this. So thank you.
I hope our viewers like it too.
Yes, this more conversation style. Let us know if you prefer more focused on a company or this more so free flow conversation. But Warren Buffett, in all his infinite wisdom, I don't have a bad thing to say about this man. He is a brilliant young individual. And if you were to take a look at his portfolio, he has underperformed the NASDAQ for more than half the years in the past decade. Yet no one would ever say that this man is a bad investor. It's just you can't know for certain always. At the end of the day, all of this is a guess.
Yes.
It's a very educated guess sometimes, but we don't know for certain. So we're going to have to give in our best effort. As always, we give our best effort, but we don't know for certain. And sometimes we hit it out of the park. Sometimes we don't, but don't feel so discouraged if you don't get a multi bagger. It happens to everyone. It's a marathon. You might not make this. I've lost money for a long period of time until I smartened up, and Raj might have similar experiences.
I've lost a lot.
Yes, but you keep failing and you keep trying and you get better. So don't be discouraged on your first loss. We will get better. We will.
Yeah, we keep on learning and we keep on developing our own experience of the market. Then you get a muscle memory of how to react at various situations, and you learn more of when not to buy, and that saves you over a period of time, I guess. So yeah, so friends, I hope you guys enjoyed this a little bit. We decided that we'll have this chat today, and next week on Monday we'll have Invite, and the week after that Sandeep and I are going to have a session where Sandeep is going to teach me how to do fundamental analysis using financial ratios. Till then, bye for now, and thanks, Sandeep.
Bye, friendos.